Hello everyone and welcome to Day Trader S&P 500. Today is Monday, August 8th, 2022. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. Got a lot to cover today, some interesting things. Let's start with the Qs. Here's a daily chart. You can see one down with the circle, two up with a circle, three down with a circle, four up. You can see three hit that target right on, and four hit that target within four, and then we had a five down. You can see in the black a one down, two up, three down, four up, and five. And we have a retracement. What's interesting with all these indexes is this retracement up has already hit the 382. You can see right there it's at 322, and it just went above that a little bit to 326.47. So we'll watch that. And I wanted to get into also, I think we had Sofi up last time. I'm going to take another look at that if I can. Let's get down here and look at Sofi, and let's see. We don't want a daily. Let's get an hourly. Scrunch that down. Get rid of that. Yeah, let's look at this from here. Bear with me while I get this rolling here. Yeah, we had a one up and a two down, and then the third wave is extending. There's 1, 2, and 3. You can see it hit right there. Okay, there was a 2.618 at 9. It hit 852 between the 168 and the 2618, and then it's correcting. That looks like an A down, a B up, and a C down. And you can see the fourth wave retracements there in red. Let me make that bigger so we can see. The 382 is at 759, and the 500 is at 7. Let me open that up. Let's get rid of this here. It's in the way. Let's do that. Remove that. There we go. The 50% is 730, and the 618 is 702, and that would retrace this third wave here from down here at 609 up there at 852. Let's look at that ABC. Let's label it real quick here for you guys. Okay, let's get an ABC in there. And from the high, we have an A down, a B up, and a C down. Let me move that because it's overlapping. There we go. And let's see what that looks like as far as an extension goes. There's an extension. That's 852. We're on it. That low there is 783. I'm within a penny, and I think we're on it there. So you can see right there, C equals A, and it went past the 1-to-1. The 1272 is right there at 758, which is right near the 382. There's the 1414 at 748, and the 1618 is down here at 734, which is near the 730. So one of these two would be ideal, either this one down here where it's near the 500 and C equals 1.618, or up here at this conjunction of Fibonacci multiples right there, 758, 759. So I say 758, 759, or 730, 734 in that range, and that should do it for the correction on Sofi. Hey, I wanted to let you guys know real quick that I'm going to be on an Elliott Wave hub August 17th. It's going to be several presenters there. I will be one of them. I'll be on at, let me check and make sure, here at 12 p.m. Make sure you register. We have a lot of free gifts and offers for people who watch, and should be pretty exciting. A lot of Elliotticians, if you will, and I will be one of those, okay? Let's get back into the US10yr here. I like to look at that every day because it is so important, and you can see we had that 5-wave rise. I kind of got it cut off there, but we'll just focus on the 5th wave from here. From that 4th wave low right there, we've got a 1 in red up, 2 in red down, 3 up, 4 down, and 5. You can see that's a 3,497. Ideally, it hit at 3,576. We even have a higher target at 4.434. However, as this breaks down and it went past that previous 4th wave low, it's likely to get into this area, the previous 4th wave of one smaller degree of this degree going down, and you can see our Fibonacci target is, the first one is way down here at 1.425. So we'll see how that bears out, but we will see if this this 3.497 holds. If it doesn't, it breaks, then we're looking at 3.576 or 4.434. Big difference there, but we'll have to watch these internal waves. It looks like a 5, 3, 5 developing, and 1, 2, 3, 4, 5. So we'll see how that goes from there. We'll have to take a little closer look at it. Some interesting things happened today, and we can see here, we're going to look at the S&P cash. We've got one down here at the 224 low, 2 up here, 3 down here, 4 up here, and 5 for the larger wave A. This used to be the alternate count. This is what really was interesting to happen today, was this fourth wave high was a key resistance level, and the cash broke above it. You can see it was 41.77, and today on the 8th, we got up to 41.86. That presents some pretty interesting trading opportunities, if you will, and I just want to share with you guys on our subscription service. We do have auto trades, and Striker Securities will auto trade Woodson Wave Report trades for you guys, so you don't have to sit there and look at the market all day like I do. There's a landing page on there. We'll get to that a little bit later, but let me get back to this here. So I'll just skip right over to the futures. This is the cash market. This is a daily chart. You can see these B-wave targets up here. Obviously, it cannot go above the start of the downturn, which is 48.18. And there is a 786, a 618, and the 500. And you can see that it already passed the 382. So it's satisfied the minimum requirement of a retracement. Obviously, it can go higher, but we'll have our marks on that in the futures. Here's what's interesting. I want to get, this is a daily chart of the cash. I want to get into the daily chart of the futures. Looks the same, right? Except for that A down, then we've got an A, B, C up. And this fourth wave high here in the futures is 42.02 and a quarter. And today, the futures did not break above it. It had a high of 41.88, as you can see there. Normally, the futures lead, thus the name futures, and the cash follows. Today, they created a divergence where the cash went up and broke above its wave 4 high, but the futures did not, creating quite an interesting divergence there, if you will. Okay, and speaking of trading, there's that Striker landing page. You would open an account if you wanted to do the trades I do with them. And they are a futures broker, and it's $150 a month, and they trade exactly what I trade. Okay, let me get back in here. We had the daily chart on the ES. So I'm going to look at this from this 36.39 low. Looking for 5 up, 3 down, and 5 up. Okay, there is that 36. Where did it go? 36. There it is. 36.39 low over there. There's 5 up for A. There's an A down, B up, and a C down for the larger wave B. Okay, so that's A, B, C, 3 down, and then 5 up. Now we've got 1, 2, 3, 4, and so far 5 is 41.88. But I want to look at this from this 41.0375 low. We're looking at the futures now. Before I forget, if this thing breaks down like the cash gave us a signal, if this thing breaks down, to make sure that this larger wave C down is in play, don't want to make sure I lose anybody here. A down, parentheses, red, B up, parentheses, red. To make sure the C down is in play, we would first need to see a break below this low, 41.03, a break below this low, 38.20, that wave 2, and a break below this low, 37.23. Don't have that quite lined up. And obviously, ultimately, a break below the wave A low. If we get all those, the wave A low break will happen. There's that final confirmation. But again, I want to look at that that move up from 41.0375. I think that I have that on a 10-minute. Here we go. Here's that 41.0375. By the way, this is the fifth wave broken down from here. and we've got a 1 up, a 2 down, a 3. Unbelievable overlap there. But whether this labeling is correct or not, we really want to look on the near term, and this is a 10-minute chart from this low. You can see this could be, there's so many beginning and ending diagonals now. Unbelievable. But anyway, that could be a 1 up and a 2 down there and a 3. I'll just put it in there so you guys don't get too confused there, because we're going to see how this thing is kind of exciting, actually. We can call that 1 up and that 2 down and that 3 up and that 4 down, and that's another diagonal triangle. It would only seem fitting that the fifth wave would end in a diagonal, an ending diagonal, if it began with a beginning diagonal. Okay, note these Fibonacci targets here for this fifth wave. It hit the 4183, it made it to 4188, and we got 92 and 4205 above, and there's that key resistance of 4202.25 that was not broken today in the futures, but was broken in the cash market. And I'll show you guys that one more time. Very interesting stuff. There's that 4202 right there. It didn't break above. This is the futures daily chart, and there's the S&P cash, and it did. One of these is going to play out, and the other one is going to follow. Normally it's the futures. So far it's the cash. So we'll see how that works out. Okay, I want to get to our post-market close report today. I think I have, there's those targets we were just talking about right here. That was the high today. Those are the higher targets. And note that 4205 is just above that stiff resistance. I think I got that same chart. Yeah, here is that larger degree of trend chart from the all-time high, the daily bar chart. You can see those B-wave targets there. Again, it has satisfied the minimum requirement, but we have to allow for it to go up here. But the thing will be to watch it break down. I like to look at it in at least 1 minute chart and look for a change in trend, and we give that to our monthly subscribers. There's our link for that Elliott Wave hub. Okay, and I think that's about it. Let me see what else, what other pictures I have for you guys here. There's our E-mini futures daily, and you can see those targets there again. Okay, let's see what else we have here. If you click on the right thing, and there's the S&P cash daily right there, and there's the E-mini futures with this. This is very interesting. See how this is gonna play out. Is that 4202 gonna hold in the futures and that same level equivalent in cash not hold, or is this going to go ahead up there and break above? Again, I mentioned this. If that goes up to 4205, okay, that would be a completed 5 waves of at least 2 degrees of trend, if not 3. So you don't just, oh, it's bullish because it went above this support. No, they're going to take it down and they're going to correct that first, okay? So because that would be the 5th wave at 2 different degrees of trend. So this thing would have to be corrected. Let me get back into the ES. This would have to be at least corrected this move, if not this entire move. Does that make sense to you guys? Again, that's where if you're interested in the auto trades, we do that with Striker Securities, okay? But wouldn't be surprising if they took that up to that 4205 target, and then everybody goes, oh, it made it above it. That's a bullish sign. It broke key support or key resistance, if you will, and then let everybody get long, and then bang, take the rug out from under the traders and investors like they like to do. Always think where they're going to make the most people lose the most money most of the time. And that's what they'll do. That would be a bullish signal. People would get long, and then they would get, but they'd take it back down. But this 5 wave advance at a minimum would have to be corrected. And when we get there, I'm getting a little bit ahead of myself. But if this is the end of the entire decline, which I don't think so at this time, this A would be a 1. This B would be a 2, and this would be 3. And the decline from that high, wherever it happens to be, would not go below this, what would be the wave 1 high at 39.50. So that's the bullish count there. We can put, actually, let me do that. Okay, we can put that 1, 2, 3, 4, 5 for you bulls. We'll see how that plays out. We got to allow for all the possibilities. We're going to make that a much bigger degree of trend. We'll make it minor. There we go. And we'll put it in black to differentiate what we have there. Getting a little bit ahead of ourselves, but like I said, if it's bullish, then it's a 1 up, a 2 down, a 3 up here, okay, and then a 4 that holds above that wave 1 high at 39.50, and then a 5, okay. That's what we're looking at. Until then, we got a 5 up, 3 down, 5 up for a B wave correction. That's what we're looking at. Thank you guys, and until next time, take care, everyone.